IAS 33, that is EPS, earning per share. IAS 33, that is earning per share, which is also known as EPS. Now, what is this? Why do we calculate? Earning per share is generally a measure to estimate the performance of the company from the perspective of the owner, or you can say equity shareholder. Because as you know, equity shareholders, ordinary shareholders have residual interest. Equity shareholders have residual interest. Equity shareholders are subordinate to all class of instruments. We have read this, I would say, funda, the concept in our financial instrument also. Do you agree? They have last priority, no privileges given, and on the case in the, I would say, situation of liquidation, they are paid at the last. Clear? Good, good. Okay. So there is no guarantee that okay, or this much will be paid to the equity shareholders. It depends upon whatever the profits are, whatever the losses are. Equity shareholders are the one who will get it. For example, there is 10x profits, then equity shareholders will get the same. In case if there are any sort of losses, then equity shareholders have to bear the same. Because creditors, secured, unsecured, preference shareholders, these are all protected, they will be paid back. But we have no guarantee towards equity shareholders. They are like owners. They are like owners. Owners. They bear risk and rewards. Okay, no such basic payment has been guaranteed. Now, the equity shareholders want to know each year what is my performance, what is my share, how are my profits, what is attributable to me. Am I going into losses or will I get some share in profits? So equity shareholders want to know what is their amount. Because if we talk about preference share, they are like, for example, 6% preference share. They will get 6% return. For example, 7% debentures. Debentures will get 7% interest. We already know what amount will be given to these holders, but we do not know what amount will be paid to equity shareholders, and therefore we are required to calculate EPS. In order to tell that, okay, in case if you hold any equity shares in the company, then this is the amount that will flow to you. Clear? Good till here? Okay. Now, if we talk about IFRS, it says it is compulsory to show on the face of financial statement. On the face of financial statement, you cannot hide it. For example, you cannot do in this way. For example, in the last year, it was 3, and in the current year, it is 2.5. The EPS is falling, and therefore you choose that, okay, the EPS is falling, let's not show it on the balance sheet and PL. Got it? You cannot hide it, whether it's an increasing trend, positive side, or a negative one. Maybe there can be a negative EPS. For example, there are losses. Then losses divided by number of shares, loss will also be attributed. Okay, there can be loss per share also. Clear? There can be circumstances where companies are not willing to show this EPS. Why? Because these are not showing positive results of the company. Still, the IFRS mandates that we have to show it on the face of the financial statement. We cannot hide it. if it's negative or falling, etc. It is not choice of the company. They have to compulsorily show on the face of the balance sheet upfront itself. Okay. Now, how do you calculate EPS? The very basic concept of EPS calculation is EPS equals to earnings divided by number of shares. We have to calculate for all the years that have been presented in the balance sheet. For example, if we are preparing two column balance sheet, that is previous year column and current year column, then we are required to calculate EPS for both previous year and current year. Okay. So earnings divided by number of shares, or you can say weighted average number of shares. Okay. Earnings, this will be generally attributable to equity. For example, if we have any NCI, as you know, we have profits for the year. Okay, and I'm talking about example. An example is of consolidated statement of PL and other comprehensive income. For example, if we have profit for the year, that is profit after tax, and if you could remember, we have to attribute the same to parent and NCI. Do you remember this? We had to show the bifurcation right after consolidated statement of PL and OCI. Profit for the year attributable to parent and NCI, and then total comprehensive income attributable to parent and NCI. Okay, good. Now, IFRS says that we will take profits, we will take earnings only attributable to equity. So, we will take only this earnings as per IAS 33, because these are related to outsiders. These are not related to owners. Clear? Any doubt?
Then, here I have a doubt. Parent
Yes,
earnings per IS 33, NCI outsider. Because in total, both are the income now, both are the earnings now.
agreed, agreed. Okay, so if you are the owner of the company, you are interested in knowing, okay, what is my share? So anything that is attributed to outsider, you have to remove the same. For example, there is $1,000 and it shows that, okay, it will be, it is the balance surplus. Now, out of this, for example, 25% you have to pay to the other shareholders. Got it? And therefore, it says that while calculating owner's share, owners, while calculating owner's share, please take only earnings attributable to parent percentage of holding. Please do not calculate EPS related to NCI, because this will be, I would say, distributed to outsiders. It has no share with parent. We will show an EPS, but from the see, I again said why EPS we are calculating EPS from the equity shareholders view, from the owner's view. Do you agree with this? So anything related to outsiders should be excluded. Clear?
Yes, ma'am. Clear.
Okay. 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 Now, basic earnings, for example, it is 1 lakh and there are like 10,000 shares, and therefore your EPS will be 1 lakh divided by 10,000 and you'll get 10 as your EPS. Very simple calculation. But there are different circumstances in which we have to understand what to take as earnings and what to take as number of shares. This is Swati Gupta, Chartered Accountant.